Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're talking about one of the hottest stocks on the lips, minds, and hopefully that was in the portfolio of many investors. And we're speaking, of course, about Massy Holdings Limited, affectionately known as Massy, of course. Now, the group would have posted some fairly impressive results on a year-on-year basis way back in December, which seems like ages ago, for their fiscal year ended September 30th, 2021. However, much of the major news, catalysts and drivers around the stock has been outside of the earnings sphere and what they are planning to do in terms of that very much anticipated cross-listing, which is set to take place on January 27th, so not too long for investors to wait to see how that pans out. Let's take a look at how Massy would have performed and what investors might expect in the months ahead. Now, for that fiscal 2021 period, the group would have delivered an earnings per share figure of $8.02, which was a commendable 12.8% increase from that $7.11 reported in that prior comparable period of fiscal 2020, certainly a very challenging period for many companies. Massy would have seemed to come through it pretty much unscathed and delivering reasonably good results. Now, revenues from continuing operations increased 8.6% from $10.2 billion to $11.1 billion, with profits for the period ultimately increasing from $743 million to $822 million, a 10.6% increase. And profit attributable to equity holders improved 13.2% from $696 million TT to $788 million. When we take a look at segment performance, well, Massy would have had much to cheer about. One of the major percentage gainers in terms of its segment performance was in that financial services segment, which would have improved from $67 million to $88 million in terms of profit before tax contributions to overall PBT for the group, a 31% odd improvement. Gas products would have also improved from $193 to $216 million, a 12% improvement. And the integrated retail segment would have actually improved from $368 to $426 million, a 15.8 odd percent improvement in performance year over year. Motors and machines trading fairly flat, 173 versus 173 over the comparable periods as well. Now, when we take a look at Massy's performance in terms of profit before tax by its geographical composition, we see some positive trends emerging. One is a lower relative reliance on its major operating jurisdiction of Trinidad and Tobago in that red slice. And we can see that the contribution to profit before taxes by TNT would have reduced from 47.6% to just around 43%. One of the notable improvements was Guyana continuing to hold and marginally increase its importance to the Massy overall portfolio, improving from 20% contribution to profit before taxes to 21%. Colombia also doubled from 3.4% in that lavender color to 7%. Barbados also improved from 8 to 10.8%. Eastern Caribbean marginally declining, as well as Jamaica from 7.8 to 6.5%. So a good story to tell from a geographical diversification of business and profits story for Massy. Of course, when we take a look at the price chart and price action over the past year, well, there were some very notable points at which Massy's stock price jumped. Now, historically, Massy has traded at between a range of 8.5 to 10.5 times over the past couple of years on a price to earnings multiple. And it did, in fact, start off the year at around those very similar levels at around 8.4 times when its first earning release came out in February of 2021. At the second earnings release, it also coincided pretty much with an announcement to cross-list that stock. The price to earnings multiple was trading at around that 8.5 times. And then we saw in that blue price line a very significant jump over a very short period of time, over a couple of months. And that multiple, that price earnings multiple, which is really the price investors pay per earnings per dollar of earnings generated by the group or the stock, would have expanded to 9.5 times. Then we saw with the stock split announcement on the December 12th or December 17th rather of 2021, continued expansion and that price jump again with its price to earnings multiple expanding from 8.5 times at the start of the year roughly to its current trading level of about 18.2 times. So positive reactions to earnings growth, of course, but certainly a lot of excitement and interest in the stock generated by its cross-listing announcement. And also, it would seem, by its stock split announcement. Now, at that price of $106, Massy is trading at a price earnings ratio, as mentioned, of about 13.2 times, which is below the sector average of 17.4 times. But take that with a pinch of salt. Earnings from continuing operations for Massy is actually trading at around 16.3 to 16.4 times at the current moment. So almost in line with the sector average of that 17.5 odd times, and its dividend yield would have fallen quite considerably, of course, with that increase in or run up in price to 2.7%, but still pretty much in line or slightly above the sector average of 2.4%. Now, why would investors buy Massy, and should investors be concerned about any particular price retractions in Massy? Well, on the pro side, there is that geographic diversification, which continues and is expected to improve and strengthen over the next couple of years for Massy. That portfolio optimization exercise, which Massy would have engaged in, reallocating its capital to higher return generating businesses and out of lower return generating businesses, and that would have been reflected in some of the sales of some of its businesses over the past couple of years, and that has been reflected in improving margins overall for the group over the past few fiscal periods. Now, elevated valuations, Massy has tended, as mentioned, to trade around the 8.5 to 10.5 time multiple, and it's currently trading at that 13.2 time multiple. So investors might be a little bit cautious there. And of course, there is always that pandemic uncertainty, which still continues to rage on at the regional and global level. And that could have some unforeseen impacts on businesses, including Massy, over the near term. So on that basis, Bourse is going to maintain a market weight rating on Massy for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, or you can check out our website, bourseinvestment.com, for this research piece and all of our other research absolutely free. And you can catch us in today's business section of the Bigger, Better Trinidad Guardian newspaper. Stay safe, get vaccinated, and see you next week on the Bourse Report.